Attention seniors, starting April 2026, new banking security measures could lock you out of your own money for days or even weeks. Last Thursday, a 71-year-old woman named Patricia from Seattle, Washington, discovered she couldn't access her account to pay for her medication. Her pension deposit of $1,240 had arrived 2 days late due to a processing delay, and the bank's automated system flagged it as suspicious. Patricia stood at the pharmacy counter, unable to purchase her blood pressure medication, while the system investigated her for 5 days. Before we go any further, let me be honest with you. Subscribers to this channel save an average of thousands per year just by staying informed. Non-subscribers find out too late. Which group do you want to be in? The information I'm sharing today could prevent a financial disaster, but if you're not subscribed, you'll miss the next critical update. Click that button right now. I'm going to walk you through exactly what's happening with banking security in 2026. You'll learn why seniors are being targeted by these new systems, how to protect yourself from account lockouts, and what to do when your bank refuses to give you access to your own money. This affects every senior with a bank account in America. Let me tell you about Thomas. He's 69 years old and lives in Denver, Colorado. Thomas worked as a postal carrier for 38 years before retiring. Every month, his pension arrives on the 5th, like clockwork. He's received the same amount, $1,920, for the past 3 years without any problems. Last month, everything changed. Thomas received a small pension adjustment, an extra $47 because of a cost of living calculation. His deposit went from $1,020 to $1,167. Within hours, his bank account was completely frozen. He discovered this when he tried to pay his electric bill online. The bank's fraud detection software saw the different amount and immediately assumed someone had hacked his pension account. Thomas called the bank 3 times that day. Each representative told him they couldn't do anything until the security team completed their review. He asked how long that would take. They said 3 to 7 business days. His rent was due in 4 days. Thomas drove to his bank branch the next morning. He brought his pension statements, his identification, and his account history going back 5 years. The branch manager sympathized, but explained the security system was automated. Human employees couldn't override it. Thomas would have to wait. For 6 days, Thomas had $4,200 in his account that he couldn't touch. His landlord charged him a $75 late fee. His electric company sent a disconnection notice. He had to borrow $300 from his nephew just to buy groceries. When the account finally unfroze, the bank sent him a form letter. It said their investigation found no evidence of fraud and apologized for any inconvenience. No mention of the late fees he'd paid. No offer to compensate him for the stress. Just a generic apology. Quick pause. What state are you watching from? Drop your state name in the comments right now. Laws differ by state, and I need to know where my viewers are. Your comment also helps this video reach more people who need this information. Comment your state below. Let me explain what actually changed in April 2026. The banking industry implemented new artificial intelligence monitoring systems. These systems were designed to catch criminals who steal money electronically. But here's the problem. The AI was trained on data from younger people who use banking differently than seniors. The old monitoring system primarily watched money leaving your account. Unauthorized purchases, suspicious withdrawals, unusual bill payments. Deposits coming into your account were generally considered safe. After all, why would you complain about money coming in? The new system monitors everything. Every deposit, every transfer, every transaction in both directions. Here's what seniors need to understand. The AI system looks for patterns. When your banking behavior matches the pattern it learned, everything works fine. When your behavior differs from the pattern, even slightly, the system flags you as potentially compromised. The system doesn't understand that you're a real person with a legitimate reason for the difference. It just sees deviation from pattern equals possible fraud. Let me tell you about Barbara. She's 74 years old and lives in Charlotte, North Carolina. Barbara gets Social Security on the 3rd Wednesday of every month. She's received $1,680 like clockwork for 2 years. In January, the government announced a cost of living adjustment. Barbara's check increased to $1,521. That's an extra $41 per month. Barbara's bank didn't see a cost of living increase. The AI system saw an anomaly. Same source, Social Security Administration, but different amount. The system calculated the probability that this was legitimate versus fraudulent. Because Barbara had received exactly $1,680 for 24 consecutive months, The system assigned a high confidence to that amount. Anything different triggered suspicion. Barbara's account was frozen at 3 a.m. on the day her deposit arrived. She woke up that morning with no idea anything was wrong. She went to the grocery store, filled her cart, and went to checkout. Her debit card was declined. She tried again. Declined. The cashier suggested she call her bank. Barbara called from the store parking lot. The automated system told her to press various numbers for different departments. After 12 minutes, she reached a human. The representative asked for her account number, social security number, mother's maiden name, and the last 4 transactions on her account. Barbara couldn't remember her last 4 transactions. She doesn't keep receipts. The representative said she'd need to go to a branch with photo identification. Barbara drove 20 minutes to her nearest branch. She waited 40 minutes to see a banker. The banker pulled up her account and saw the fraud flag. He explained the system had detected unusual activity. Barbara explained the cost of living increase. The banker nodded sympathetically. He said he believed her, but he couldn't remove the flag. Only the Central Fraud Department could do that. He gave her a phone number to call. Barbara called the fraud department from the bank lobby. She was on hold for 35 minutes. When someone finally answered, they asked her the same security questions. Then they said they'd need to verify the Social Security deposit with the government. That would take 2 to 4 business days. Barbara asked what she should do for groceries. The representative suggested using a credit card or asking family for help. Barbara is on a fixed income. She doesn't have a credit card because she doesn't want debt. Her daughter lives in another state. For 3 days, Barbara ate soup and crackers from her pantry while the bank verified that her government benefit was real. Real quick, if you're getting value from this, hit the like button. The algorithm pushes videos with high like ratios to more people. That means more seniors see this information and can protect themselves before this happens to them. Takes 2 seconds. Like the video right now. Let me tell you about William. He's 72 years old and lives in Portland, Oregon. William is a widower who lives alone. His daughter Karen checks on him twice a week and helps with his finances. In March, William's washing machine broke. He needed $650 to replace it, but didn't have enough in his checking account. Karen sent him $650 through her bank's instant transfer service. She'd never sent him money this way before. Usually she wrote him a check when he needed help, but she was traveling for work and couldn't visit, so she used the digital transfer. The money arrived in William's account within minutes. 30 minutes later, the account was frozen. William didn't discover the freeze until the next morning. He'd planned to go to the appliance store to buy the washing machine. When he checked his balance at the ATM, it showed $892, which was correct. But when he tried to withdraw $700, the machine said his daily limit was exceeded. William hadn't withdrawn anything in 3 days. He went inside the bank. The teller informed him that his account was under security review. A large deposit from an unknown source had triggered the fraud system. William explained it was from his daughter. The teller asked if he had proof. William called Karen, who was in a meeting. She didn't answer. The bank said they'd need to speak with the sender to verify the transfer was authorized. Karen called the bank that evening. She verified her identity and confirmed she'd sent the money to her father. The bank said they'd remove the fraud flag within 24 hours. It took 3 days. During that time, William's landlord stopped by to collect rent. William wrote a check, not knowing his account was frozen. The check bounced. His landlord charged him a $50 return check fee, and the bank charged him $35 for insufficient funds. When William finally got access to his account, he'd lost $85 in fees. The $650 his daughter sent to help him actually cost him $735 after the fees. He still needed to buy the washing machine, but now he didn't have enough money. Karen had to send another $100. This time she drove to Portland and gave him cash. The banking industry will tell you these security measures protect seniors from scams. And yes, scams targeting seniors are real and devastating. But here's what they won't tell you. The system can't tell the difference between a scammer stealing your money and your daughter helping you buy a washing machine. It can't tell the difference between identity theft and a cost of living increase. It sees difference and it assumes fraud. The AI makes decisions in milliseconds based on mathematical probability. It doesn't understand that freezing your account could cause you to miss rent, go without medication, or be unable to buy food. It doesn't care that you're a 74-year-old woman who's banked at the same institution for 40 years. It just sees numbers that don't match the pattern. Think of someone who needs this information: your parent, sibling, friend, or neighbor, someone who could have their account frozen and not know what to do. Share this video with them immediately. Text them the link right now. Don't wait until after the video ends. Do it now while you're thinking about it. Let me tell you about Nancy. She's 70 years old and lives in Austin, Texas. Nancy is careful with her money. She balances her checkbook every week. She reviews her bank statements. She never carries more than $40 in cash. Nancy does everything right. In February, Nancy noticed a pending charge on her account for $178. The description said, "Electronic payment to TechServe Solutions." Nancy had never heard of TechServe Solutions. Nancy called her bank within an hour of seeing the charge. She told them it was unauthorized. The representative looked at her account and confirmed the charge was still pending, not posted. The representative said, "Perfect timing. We can file a written statement of unauthorized debit and stop this before it goes through." Nancy provided details about when she noticed it and confirmed she didn't authorize it. The representative filed the statement immediately. The charge disappeared from her account within 2 hours. Nancy never lost a single dollar. This is different from the old system. Before April 2026, banks made you wait until a fraudulent charge posted to your account. Then you'd file a dispute, wait for an investigation, and hope to get your money back in a few weeks. The new rules let banks stop fraud before it happens if you catch it while it's pending. But here's the critical part. You must check your account every single day. Nancy caught the fraud because she logs into her banking app every morning with her coffee. If she'd waited a week to check, the charge would have posted and she'd have been stuck waiting for a refund. Let me tell you about Richard. He's 68 years old and lives in Jacksonville, Florida. Richard doesn't use online banking. He gets paper statements once a month and reviews them when they arrive. In March, Richard's statement showed a charge for $340 to a company called Home Equip Direct. Richard looked through his receipts. He hadn't ordered anything from that company. He called his bank. The charge had posted 2 weeks earlier. Richard filed a fraud dispute. The bank said they'd investigate and provide a provisional credit while they worked on it. That provisional credit took 7 days to appear. During that week, Richard had $340 less than he thought he had. One of his checks bounced because he'd calculated his balance without accounting for the fraudulent charge. Richard eventually got his money back, but it took 3 weeks total. He paid $35 in bounced check fees. If Richard had been checking his account daily and caught the charge while it was pending, he could have stopped it immediately like Nancy did. The difference between Nancy and Richard wasn't intelligence or financial knowledge. It was timing. Nancy checked daily, Richard checked monthly. That difference cost Richard $35 and 3 weeks of stress. Here's what frustrates me about these new systems. They're designed to catch criminals, but they're punishing innocent people. The banks rolled out AI monitoring without considering how seniors actually use banking services. They didn't account for fixed income patterns. They didn't consider that many seniors don't use online banking. They just turned on the system and let it make decisions. And when seniors get caught in the system, the banks offer no real help. You can't talk to a person with decision-making authority. Everyone you reach on the phone is reading from a script. They sympathize, but they can't override the computer. You're stuck waiting for the AI to finish its investigation. Let me ask, has this happened to you or someone you know? Comment yes or no below. I'm collecting data on how widespread this problem is. Your comment also helps the algorithm show this video to others who need it. Drop your answer right now. Let me tell you about Carol. She's 73 years old and lives in Indianapolis, Indiana. Carol received a phone call in late March. The caller said, "This is the fraud department at your bank. We've detected suspicious activity on your account. Someone tried to withdraw $3,000 in another state. We need to verify your identity and secure your account immediately." Carol panicked. She's heard about identity theft. The caller sounded professional and knew her bank's name. The caller said, "I'm going to help you move your money to a protected account while we investigate. This will keep it safe from the criminals." The caller walked Carol through transferring $8,200 to what he called a security holding account. Carol completed the transfer using her bank's instant transfer system. The money moved in under 2 minutes. The caller said, "Perfect, your money is now secure. We'll call you back in 24 hours with an update." The caller hung up. Carol felt relieved. She'd protected her money from criminals, except she hadn't. The caller was the criminal. Carol had just sent $8,200 to a scammer. Carol realized something was wrong the next evening when the bank didn't call back. She called her bank's customer service number from her statement. They told her no one from the fraud department had called her. They had no record of suspicious activity. Carol's heart sank. She asked if they could reverse the transfer. The bank checked. The money had been withdrawn from the receiving account hours ago. It was gone. Under the old rules, Carol would have had no recourse. She authorized the transfer herself, even though she was tricked. The bank would say it wasn't their problem, But under the new April 2026 rules, there's a new category called authorized push payment fraud. This covers situations where you were deceived into authorizing a payment. Carol filed an APP fraud report with her bank the next morning. She explained exactly what happened, what the caller said, how they convinced her, and when she realized it was a scam. The bank opened an investigation. They contacted the receiving bank to try to recover the funds. Unfortunately, the scammer had already moved the money. Carol didn't get her savings back. But the bank investigation is now required by law, which gives victims a chance they never had before. Here's what makes me angry. These scammers specifically target seniors because they know seniors are more likely to trust authority figures. They use fear and urgency to prevent clear thinking. They exploit the fact that seniors are worried about fraud, which is exactly what the banks keep telling seniors to worry about. Let me tell you about Donald. He's 75 years old and lives in Milwaukee, Wisconsin. Donald still receives his Social Security check by mail. It arrives the first week of every month. In April, his check didn't arrive. By the 10th, Donald was worried. He called Social Security to ask about it. The representative told him about the new policy. Paper checks are being phased out. He needed to switch to direct deposit or get a prepaid card. Donald doesn't have a bank account. He cashed his Social Security checks at a check cashing store and paid his bills with money orders. He's done this for 15 years since his wife died and they closed their joint account. The Social Security representative explained that check cashing stores charge high fees. Direct deposit or the prepaid card would save him money. Donald was skeptical of banks after the 2008 financial crisis, but he didn't have a choice anymore. He asked about the prepaid card option. The representative explained that it's called Direct Express. The government would load his benefits onto the card each month. He could use it anywhere that accepts debit cards. There would be no monthly fees if he used it properly. Donald signed up for the Direct Express card. It arrived 10 days later. His Social Security payment was loaded onto the card on the third Wednesday, just like it used to arrive by check. Donald used the card to withdraw $500 cash at an ATM. He paid his rent and utilities with money orders like always. He kept the card for other expenses. 2 months later, Donald's card stopped working. He called the Direct Express customer service number. After 30 minutes on hold, a representative told him the card had been flagged for unusual activity. Donald regularly withdrew large amounts of cash. The system thought his card might be stolen. They'd mailed him a verification form. He needed to fill it out and mail it back to unlock the card. Donald was furious. This was his money from the government. Why did he need permission to access it? The representative apologized but said it was security policy. Donald received the form 3 days later. He filled it out and mailed it back. It took another week for the card to be unlocked. During that time, Donald had no access to his benefits. The problem is that the system doesn't understand how different people use their money. The AI expects small, frequent transactions. Donald prefers large cash withdrawals. Both are legitimate, but the AI only recognizes one pattern as normal. Here's exactly what you need to do. I'm giving you 7 steps. Each one is simple and specific. You don't need to complete everything today, but start with step 1 this week. Write these down. Ready? Let's begin. Step 1. Open a second bank account at a completely different bank. This is your emergency backup. If your primary account gets frozen, you'll have access to money in the second account. Put at least $500 in this backup account, more if possible. Choose a bank that's totally separate from your main bank. If you bank at Chase, open your backup at a credit union. This protects you if one institution has problems. Step 2. Set up daily account monitoring. You have 3 options depending on your comfort with technology. Option A. Log into online banking every morning. Check for pending and posted transactions. Option B. Sign up for text message alerts for every transaction over $20. You'll get instant notifications. Option C. Call your bank's automated phone system daily and check your balance and recent activity. Pick the option that works for you and do it every single day without exception. Step 3. Verify your government benefits are set up for direct deposit. Call Social Security at 1-800-772-1213. Ask them to confirm how you're receiving your benefits. If you're still getting paper checks, set up direct deposit immediately. Have your bank account number and routing number ready when you call. This prevents mail theft and ensures reliable payment. Do this by the end of next week. Step 4. Contact your bank and request transfer limits. Tell them, I want to set a daily limit of $300 on instant transfers and wire transfers from my account. This prevents scammers from draining your account in one transaction if they trick you. You can always call the bank to authorize a larger transfer if you legitimately need one. This simple limit stops the most devastating scams. Make this call tomorrow. Step 5. Ask your bank about their fraud freeze policy. Say, what triggers an automatic account freeze on my account? If my account is frozen, what's your process for unfreezing it? How quickly can I get emergency access to pay essential bills? Write down their answers. Get the direct phone number for fraud investigations. Keep this information with your important papers. Knowing the process before you need it saves critical time. Step 6. Notify your bank about predictable irregular deposits. If you know you're getting a tax refund, inheritance, property sale proceeds, or any unusual deposit, call your bank first. Say, I'm expecting a deposit of approximately $5,000 from the sale of my car on May 15th. Please note this in my account so your fraud system doesn't flag it. This simple call can prevent your account from being frozen. Step 7. Review your bank's fee schedule and consider switching. Get a copy of your bank's fee disclosure. Look at monthly maintenance fees, overdraft fees, ATM fees, and wire transfer fees. If your bank charges high fees, start researching alternatives. Credit unions typically have lower fees than big banks. Online banks often have no monthly fees. If you're paying more than $10 per month in fees, you should switch. Schedule 1 hour next week to research better options. Let's review what we covered. New AI fraud detection systems are freezing senior bank accounts based on normal activities like cost of living increases and family help. These freezes can last days or weeks, preventing you from paying bills or buying necessities. The system is biased against how seniors actually use banking services. You now know how to protect yourself with backup accounts and daily monitoring. Here's a fact that should concern you. According to banking industry data, account freezes affecting seniors increased by 340% between March and May 2026. Most of those freezes involved legitimate transactions that the AI system couldn't properly evaluate. Thousands of seniors have been locked out of their money through no fault of their own. If this helped you understand what's happening, here's what to do. Subscribe so you catch my next video on protecting yourself from financial exploitation. Share this with anyone you know who might be affected, especially seniors living alone. Comment your situation or state below. I read every comment and respond when possible. Your engagement helps this video reach more people who desperately need this information. Important disclaimer: this video is educational only, not legal, financial, tax, or banking advice. Every situation differs and laws vary by state. Consult licensed professionals, attorneys, certified financial planners, or banking advisors before making decisions based on this content. What works for one person may not work for another. I'm providing information, not individualized advice for your specific circumstances.